Okay, you want me to start now, David?
Yeah, you can go ahead now.
So, David, thank you for inviting me. Ladies and gentlemen, please ignore the quality of the voice and pay attention to the quality of the recording and the information. My voice is bad because I've been getting some treatments on an injury that goes back to the day I was 7 years old. So it's been a long time since I've been trading now, since 1967. So having traded since 1967, I do know something about the markets. I've traded a lot, been all over the world trading in championship trades on live in front of live people. And so maybe I can teach you something. The bottom line is this. After trading for more than half a century, I've come to some very important conclusions. And one of those conclusions is this. Most people who trade, especially short term, lose money. Most new accounts last less than 1 year. Most traders couldn't make a profit, even if you gave them a great trading system. I've given people trades that have been accurate 80 to 90% of the time for many, many years, and they still find a way to mess it up. So in my experience, I have rejected most trading methods because most trading methods that people will have you trade are untested, unfiltered, have no statistics behind them, have nothing but mythology and hope and fear and greed. Today, I'm going to show you how to make trades that are very accurate, no guarantees. And one of the reasons we don't guarantee anything is not because the underlying methods don't work. It's because once I teach you something, or once anybody teaches you something about the market, it's in your hands, and God knows what you're going to do with it. I've been able to take great trading systems and give them to poor traders and watch those traders make a mess out of those systems. I've been able to take mediocre, average trading systems and give them to good traders and watch them make money with it. Because a good trader is not about being successful at every trade. It's about managing risk. So when people ask me what I do for a living, I tell them I manage risk. If you're managing risk the right way, even if you have a mediocre trading system, it's going to make money for you. So let me show you what I do. And before we do that, let's talk about what's necessary for a trade. What's needed for a trade? Anybody can look at a chart, a historical chart, and say, here's where I would have bought, here's where I would have sell, here's where the trend line goes, here's where I would have put resistance, here's support. I would have sold on this pullback. All of that is just pretend. What's really important is what's happening in real time, not what's going to happen after the fact. So what I like to do is I like to look at trades that are going to happen before they happen. But I also want to have history behind it. There are very few things in trading that work. One of the things that works much better than anything else is seasonality, the tendency of trades to repeat over time. Why? Because stocks and futures tend to do the same thing at the same time most of the time. Earnings, government reports, commitment of traders report. In fact, if you look at the calendar, you'll know what's coming up and you'll be able to see what to do. But let's talk about it in specific. I'm a numbers guy. If someone shows me a strategy and they say, this is a great strategy, I will always ask them the same question. What are the numbers? What's the percentage accuracy? What's the average profit? What's the average loss? How many years of history have you studied this trade? If you're talking about support and resistance, what's the exact number? Don't tell me support and resistance are around here or nearby or close by. We want exact numbers. So before I make a trade, here's what I want to know. And by the way, you can listen to the voice of experience, which is me, having made thousands of trades in my lifetime, or you can listen to the new people who want to sell you something for $39 that will guarantee you a profit in 3 days. It's not going to happen. If you want to be a day trader, there's ways to day trade. But here's the problem. When you're day trading, you're limiting your potential. because you must be out by the end of the day. If you're not out by the end of the day, the margin goes up and it's no longer a day trade and all the statistics change. So what I'm going to show you today is not day trading, it's short-term trading. I'm going to show you where to get in, where to get out, the stop, the profit target, the percentage accuracy, percentage average win, percentage average loss, the drawdown, everything you want to know about a trade. And then once you know all those statistics, you can look at it and say, what's your excuse this time? So I'm going to go to one of my websites, Seasonal Trader. And by the way, I have nothing to sell you. I have no special offers for you. I have no free trials for you, except if you want to take one on this site. There's nothing to pay, nothing to do except listen to what I'm telling you and absorb it and understand it. So I'm going to go to this website right over here and I'm going to log in. And I will take some questions later, but chances are I won't have time. We'll see what happens. So here we go. First, let me show you something remarkable. I'm going to go here where it says seasonal charts. I'm going to go to US stock charts, like so. Just bear with me for a moment. I'm going to pull up a chart of the Dow Jones, like so. So let's go to the Dow. Just one moment, please. Bear with me. Let's go back. Let's go back to the D's. Here we go. Pardon the noise. Dow Jones Industrial Average back to 1920, like so. And now it will bring up a screen. Let me explain to you what we're looking at. So let me bring the chart down a little bit for you. We have taken every year of the Dow Jones from 1920 to 2025. So we're talking well over 100 years of history. Ask yourself the question, who in this business is going to give you 100 years of history? Who's going to give you 5 years of history, 3 years of history? Very few people will. First of all, because they don't have it. And second of all, because the farther they go back in time, the less their strategy works. So what have I done here? I've taken every year of the Dow Jones and I've normalized the data. Mathematically, we've made the high of the year equal to 100, the low of the year equal to 0, so that no 1 year or 2 year or 10 years has an impact. We removed the data and kept the trend. And this trend is what I call the market DNA. So let's look at it. From the beginning of this year in January to where we are right now, which is right over here approximately. Think about what the trend of the market has been. Has the trend been up? Indeed it has. It looks just like we're looking right now. So the question is, what's going to happen? By looking at this chart, we know, excuse me, we know what's going to happen. Not with perfection, but in terms of the trend. One moment, please, grab some water. So okay, so we know what's going to happen. Down here in the cells, we have the percentage of time. So exactly right over here, it says the first 2 weeks of July, which we just ended, are likely to be up weeks 74% and 66% of the time. But looking forward in the year to the rest of the year, the strongest period of time has been right over here, from late September until the end of the year. So this is the roadmap. Remember, this does not tell you exactly what's going to happen. It tells us what has happened, and we can use this as a guide to making further trades. But this is not enough information for me. I want to know exactly what to do, when to do it, even to the time of day. And I want to know my odds. And this is the most important thing I can tell you. Mark my words. If you don't know the odds and you don't know the information that I'm going to give you, you've got nothing except your imagination. And your imagination will lead you astray. Trust me, I know what the hell I'm talking about. I've been doing it for a long time. So let's do this. Let's go back this way. And let's get specific. Seasonal trades in stocks, like so. And remember what I said. I don't want to know what has happened. I want to know what's going to happen. But in this case, this information will tell you both. It will tell you what has happened. It will tell you how often it has happened. And it will tell you what's going to happen with the percentage odds given. In other words, we know we won't always be right, but we do know how often we'll be right. And most of all, and this is the most important thing I can tell you, most of all, it tells us what to expect in the way of a loss. Therefore, if a trade is too risky from the beginning, we're not going to take that trade. We have lots of possibilities. So example, let's do this. Let's go to 3M. Let's ask a question. In 3M, for the month of August, has there been any patterns that have been right 75% of the time or more with a profit to loss ratio of 3 to 1 or higher? Meaning what? Meaning when it's right in sum total, it makes 3 times as much as it loses when it's wrong. And I don't want to risk more than 5% on this particular stock. And remember, it's like going to a restaurant. I'm ordering off of a menu and asking the question, hey computer, has there been anything in 3M in the last 50 years, not 15 years, not 5 years, not 10 years, but the last 50 years or more, that has been accurate 75% of the time with these statistics? In other words, I want a short-term trade, 25 days or less, with 5% risk of the entry price, with a 3 to 1 PO ratio, 75% odds. That's a pretty tall order. It's very demanding. But if it's there, the computer will find it. And remember, we're not making anything up. This is not artificial intelligence that makes things up if it can't find an answer. This is an actual study of history. And it says, has there been a repetitive pattern in 3M that meets these criteria for the month of August? And let's throw in the month of July as well. So we'll do this like so. And we're going to ask for July and August because July is only about 2/3 over. If there's nothing there, the computer will come back and say, there's nothing there. So let's check it out. Computer says there's nothing that meets your criteria. No problem. It says there's nothing there. So maybe our expectations are too high. Maybe we'll be happy with 70%. So we go back and we do another search. So in other words, what I'm doing here is some very important research, which you can do on your own. You don't need the answers from me. So we're going to go to 70% odds. And we're going to tone down our expectations. I'm happy being right and making twice as much when I'm right as they lose when I'm wrong. So use 2 to 1 ratio. And let's take a little more risk. Let's take 8% risk. And again, this is completely unrehearsed what I'm showing you. So let's look again and search like so. Oh, we found something. Isn't that great? It says if you bought 3M end of day, July 6th, and got out end of day, July 22nd, you would have been right 72.7% of the time. Now let's put it in perspective. How often are most people right? Most people are right 0% of the time. So 71% of the time is 72% of the time is a pretty good number. And what are the statistics? Average profit, average loss, stop loss, everything we need to know. Variations on the theme. There's a trade in July. There's a trade in August. Now let's look at the history. Check this out. This is the part that's most important to me. Maybe not to you, but to me it is. Let's look. Here is the complete history of that procedure, going back 55 55 years, that's more than half a century. Every trade, in, out, stop, every year for the last 55 years. And here's the chart. So I ask you the question, does your methodology, what you're using, come even close to giving you this kind of information? And by the way, this is really not a very impressive trade. I don't like the looks of it. It's taken too many losses. It's only 70%. Can we do better? Let's do that. Let's go back. And again, I want to say to you, look at the history. If your methodology does not give you sufficient history to be confident in your decision, don't take the trade. No one's forcing you to do it. Let's go back and search. Sorry about that. Just one, please. Go back. Back and search the details. So we're going to return to the search, like so. Let's do this. Let's clear this out, like so. No, let's leave these. Let's pick the top first 10 stocks, like so. We're going to do multiple stock search, like so. So we're going to put all these here, like this. And remember, you're doing research, and to me, this is a whole lot better than looking at a bunch of lines and putting in the lines afterwards, because everything is already here. It's all been researched for you. It's all right there, and it's based on real, solid history. So I'm going to go like that and do a few more. Here we go. Just bear with me, folks. Believe it or not, I do know what I'm doing. I've been doing it a long time, and I'll tell you, this is one of the best methods you can use. Okay, let's go to one more, and I'll have the computer search it. So same thing, but we're searching a bunch of stocks. And by the way, on our list, we have every S&P 100 stock, S&P 500 stock, and all the Dow stocks. So we've got a lot to choose from. We don't need to fool around with new issues and all the rest of that stuff, because we know the history. And let's put the thing to search, like so, and see what we come up with. Ah, yes. Now let's do this. Let's do a sort from the highest percent in. Just one moment. Okay, so here we have a trade that's been right 91% of the time. That's the good news. Let's look at the trade. AbbVie, August 7th through August the 12th. It's a 5-day trade. That's the good news, but here's the bad news. Let me show you what it is. Look at the history. It's only got 12 years of history. If you're willing to gamble on a trade with only 5 years, 12 years of history, or whatever it is, that's your problem. I'm not interested in this trade. I want at least 25 years of history. So that's no problem. I'll just go back and do it again. Watch. I'm going to eliminate AbbVie and return to the search, like so. I'm going to eliminate AbbVie because it doesn't have enough history in it, and redo the search. And by the way, if you think this is too much work, think about what you're getting in return. Sometimes you have to do a little bit of work to get a little bit of reward, or a lot of reward. So let's redo the search now, like so. And here we go. Let's redo this like so and sort from the highest wins like this. And we've got, one moment please, 79% wins in a censure. Let's check it out. And here's the trade. And by the way, please note, I'm not only giving you the name of the stock, giving you the date to get in, the date to get out, the average profit per trade, the profit to loss ratio, everything you need to know, including the stop and the first target, because the first target is the average percent profit per trade. So what I'm saying is, within a matter of about 10 days, this trade averages an average profit of 2.45%. Very impressive. Now let's look at the history. Now you may find this boring, but I have made a lot of money with this, and I want you to make money too. I don't want you to be a loser, and I don't want you to use imaginary lines or expectations or myths or magic. It doesn't work. Here we go. Here's 24 years of history. It's not 50, but it's very good because we need at least 20 years, preferably 25. This is close enough. Let's look at the track record. Here we go. So, very impressive history. And here's a trade I'm willing to make. But here's the good news. Let me show you. You can decide ahead of time what your risk is. Because in order for this trade to be profitable, this percentage of the time, 79% of the time, you need to be willing to risk 3%. 3% of what? 3% of your original entry price. So if the stock trades closes at $50 a share, you're going to need to risk $15 a share on a closing basis in order to take this trade. So there's a trade I'm going to put in a folder and save it for myself. I'm going to go back and find another one. Let's go back like so. And let's take Adobe. Everybody loves Adobe. Let's look at this trade. 76% win. Getting in close of trading August 7th, getting out August 13th. So there's your short-term trade, 76% wins. Let's take a look at the history, like so. So we're looking at 38 years of history, which in and of itself is quite impressive. Excuse me. Let's look at the cumulative performance. Okay, what it has done. So look at this trade for a minute and think. There's something I don't like about this trade. You should be able to see it right away. You don't need to guess. I'll tell you the answer right now. One moment, please. This is what I don't like about the trade. 1, 2, 3, 4, 5, 6 fairly large losses percentage-wise. I don't like that. That's fine. I've got hundreds of other stocks to choose from. I don't need to like it. And by the way, this methodology is perfect for artificial intelligence, which we're working on right now. We're basically going to say to the computer, this is what we're looking for. Go find it. And once you've found it, see if there's any pattern that happens when it doesn't work. In other words, look at this year and answer the question. What is happening this year when the trade didn't work? Is there anything consistent between these losing years? If it's there, AI will find it. So let's go back now. Hold on, please. And let's go back to the search right over here. And let's look at another one. In fact, let's look a little bit down on the list and go to page 2. You'll notice it gives us a lot of possibilities. Why? Because we can decide which one we like best of all. All of these have had a certain percentage accuracy, but in some cases, the average loss per trade might be too big. So let's go to page 2, like so. Just one moment, please. And here we go to page 2. On page 2, we have some more stocks. Let's look at them. Let's resort the percentage wins. Very easy to do. And by the way, to many of you, this may be very foreign. You may not relate to this. Why? Because you've never done this before. And the fact that you've never done this before is very important, because chances are, if you haven't done it before, it's probably a good thing, because you've been brainwashed into believing that a lot of stuff that doesn't work does work, and it really doesn't at all. So let's do this. Let's go back to the search like so. Let's pick another popular stock. Let's undo all of these, clear the selection, and I'll show you how to use the seasonal chart. Let's go down a little bit. And by the way, if you're having trouble hearing me, I'm sorry about that. Doing my best. Okay, let's look at it. Let's look at Apple, like so. And let's leave these search criteria in the search right over here. In fact, let's remove the 25-day limitation, because by this I can find short-term trades as well as longer-term trades. Here we go. So let's remove that expectation, and let's make this a little bit higher. Let's go 75%, like so. And as you can see, this is like shopping on a menu. You can put in anything you want. If it's not there, the computer won't find it. It's really simple. So let's do a search for Apple. In fact, let's do this. Let's search the entire year for Apple and find the absolute best trade for Apple using these criteria. Here we go. There's two of them, and they're really good trades with accuracy of 75%. And let's take a look. Here's the history. And remember, this is all about you. This is all about what you want. Because if you don't like the trade for any reason, don't take it, move on to the next one. Because there are literally thousands of trades here that will meet very important criteria. So here's the chart. And what has happened? You'll notice that after this period of time, like here, the stock has really taken off and accelerated to the upside dramatically. Now, to most of you, because you've been brainwashed, you're thinking, uh-oh, it's going to correct. This chart is not to be read the way you would read a stock chart. This says the stock is getting better. As time goes on, seasonality is taking hold and making the stock work better. So this is a trade that I would take. But I have one more thing I want to look at. Let me show you what it is. Percent average profit, percent average loss. Compare these two right over here. These two. One moment, please. You'll notice when it loses money, it loses 6.1%. When it makes money, it makes 6.62%. So what does it mean? It means that when it's right, it makes more money than it loses when it's wrong. And that's what you want. So this is a keeper. This is a good one. No guarantees. The question is, what has happened this year? Look it up. Remember, we have a stop. So I'm showing you this trade because this trade is now officially over, unless it was profitable on the exit date of the 15th. You can take a look and check it out yourself. Win, lose, or draw. We live and die by the statistics. Let's go back to the next one. Hold on a moment, please. Now let's find this. Let's go back to Apple, like so, and change our search criteria like this. I'm going to say for this Apple stock, I want a bigger stop. I want to give it a little more room. So I'm going to give it 15%. By the way, these are perfectly optionable stocks. So you can trade, buy an option if you don't like the risk of being long or short the underlying stock. Here we go, 15%, like so. And I want this to be a short-term duration stock. Let's give it 25 days or less, like so. And rerun the numbers. By the way, hold on, please. 25%, not 25 days. Let's do a search. Remember, we're searching the entire year and asking for the best trade with these criteria. And the only thing we changed was he gave it a little more room. And here's the trades. Made a big difference. So here's the trade again with 15% risk. And here's the history again. Like so. And we're looking at 44 years of history. Very very impressive. Take a look at the history now. Please. Here we go. All the way down here. And what have we done in our search? We gave it a bigger stop, which changes the statistics a little bit and makes this even better. So in its entire history, it's only had 1, 2, 3, 4, 5 losing trades, and that's it. So the question I have for you is this: what would you rather do? Trade with logic and information, or trade with guesswork and expectations and myth? Now let me show you something you're not going to believe. I'm going to go all the way back to the search, like right over here. I'm going to go to the Dow Jones. So let's return to the search, like so. Just bear with me, folks. And then I will try and take your questions. And we're going to leave the year completely selected, and we're going to go to the Dow Jones again. This time we're going to go back to 1900. So who in this business is willing to give you history that goes back over 100 years? Just bear with me, folks. Dow Jones to 1920. So you're about to see something very dramatic. I'm going to say to the computer, has there been anything in the Dow Jones Industrial Average going all the way back to 1920, over 100 years, that has been accurate 75% of the time or more? So I want you to think about it. Do you think it's possible that in this day and age of volatility, of earnings reports, of war and famine and politics and political games and spying, subterfuge, has there been anything so consistent in the Dow for over 100 years? Remember, we're going back to 1920. And we're going to ask the question. Let's do it right now, because we have a massive database, and if there's something there, it'll find it. So let's do a search, like so. And what does the computer say? Right over here at the top of the list, it says, oh, this is Apple. Sorry about that. Let's go back and disable Apple. Just bear with me, folks. Let's go here and undo Apple. Rerun the scan. Here we go. Let's do a search. Oh my goodness, look what we've got. 82% wins with no stop. In other words, it would be an option trade. Buying the Dow, end of day, October 26th, getting out January 6th. Now, to most traders, this is a long-term trade. Most traders love to take their profits quickly and ride their losses till they grow hair on them. But not me. Let me show you the history. Here we go. Here's the history. Every year back to 1928. Here we go. 97 trades, 80 winners. Here's a complete track record right over here. So do notice this. 2 years ago, it turned in its second highest winning trade, the third highest winning trade ever, even though I've been promoting this trade every year for the last 35 years. It still works. So there you have it. Now let me show you one more thing. Not only can we do this on stocks, we can do this on futures as well. Let me show you what I mean. Let's go back to seasonal. Let's go to seasonal trades, US futures trades, like so. Just a moment. Let's look at a popular one. How about gold? How about copper? So we're going to look at copper. Remember, there's a lot of ETFs for copper: CPER, COPX, FCX, and so forth. So let's go to copper and do a search. We're going to ask a general question. What time of the year has been the best time of the year risking less than 100%? In other words, with a real stop. Has there been anything in copper that's been right 75% of the time in copper futures? Let's do a search. And again, apologies for the voice or lack thereof. Well, here we go. There is 2 pages of trades. The best one right over here, December 18th to December 25th. So you got plenty of time to think about this one. Let's look at the history. And then I'll show you something that you might like even better. History. 53 years of history. Almost as long as I've been trading. And there's the track record right over there. An exemplary track record, very worthwhile. It's been only one big loss. And guess what? That big loss was followed by a huge winner the very next year. And you'll notice what else? It's never lost money more than 2 times in a row. Very impressive. But let me show you the best thing. Let's go back to this right over here. Just bear with me for a moment. Oh, you can go to this right over here. Seasonal. And here's the chart. Come on, computer, cough it up. This yellow period of time indicates the period of time for that particular trade. So the question is, what happens after the trade is over? Take a look at the chart. But I take a sip of water. Over here is the 2-week period of time that we're in the trade. Buy March copper. After the trade is over, does it continue to go higher? Yes. So if this trade works, it predicts what's likely to happen for the rest of the year. In other words, ending the year on a strong note. And that's what we expect is going to happen in copper. Let me show you something else. I'm going to go back and look at July copper, like so, and show the chart. So if you're interested in a particular contract month, I'll show you that chart right now. Just one moment, please. Come on, computer, do your thing. Should be there right a moment. Here we go. So look, this chart shows us very clearly that in the July copper contract, there's been a pronounced downtrend from April through June, right over here. So during this period of time, you wouldn't want to be looking for long trades. You'd want to be looking for short trades. So David, how much time do I have left?
Up to a half an hour.
Okay, let's continue then. Let's go forward. Let me show you what else we can do with this chart. We can turn this chart into a daily chart. Let me show you what I mean. Just hang in there. Sometimes it takes a little time to post. Just hang in there. Computer's looking at a massive amount of data. Just bear with me, guys and girls. It's still looking. Remember, there's trillions of data points here. We'll give it another few seconds and then we'll go on to something else. In fact, I might even have time to take your questions if my voice holds out. Here we go. So look what we've done. We've converted this chart into a daily chart. Look at the bottom of the screen. Let me go there. Just one moment, please. So do you see anything here that's interesting? I do. I see this right over here. February 25th and 26th, these 2 days right over here. Historically, up days 63% and 62% of the time on the way up. So here I found the solution to a short-term trade. It's only a 2-day trade. And here's a 2-day down trade right over here with percentage odds. So when I say you've got to know the numbers, that's exactly what I mean. If you don't know the numbers, you're trading blind. And if you're trading blind, you're going to get hurt. And you'll be among those statistics of people who consistently lose money in the markets. Let's go back to the weekly chart. Let's do this. Let's get back to reality. Go back to the search. One moment, please. And I'm going to go. Oh, by the way, here we explain exactly what all the charts mean. Like so. What the various points are, what they mean, etc. Like so. And how we got this information. Very important. So we don't expect people to fly blind. We expect them to make money with the information. But you can't make money unless you know what it is. So let's do this. Let's go to the question that's on everyone's mind. U.S. futures trades and S&P. Like so. Let's go to S&P. All the way down to the list. Here we go. S&P 500. Let's ask the question specifically for the months of July, August, and September. So here we are, S&P, July, August, July, August, and September. I'm going to be very demanding. I don't want to risk more than 5%. So I'm going to put a stop in right over here and say, if there's anything that's more than 5% risk, I'm not interested in it. So let's do that like so. One moment, please. I want 75% accuracy. And I want a 5% risk or less, like so. So just hang in there, please. 5%. And let's do a search. Now remember, if there's something there, it'll find it. If there's nothing there that meets our criteria, it's going to give you no answer. That's the way it should be. You can't be making things up. And by the way, this does not care about the fundamentals, does not care about anything like that, does not care about trend lines, reversals, key reversals. It is what it is. Let's take a look. My goodness, it found something and it put the best one in the top position. So let's take a look at it. July 10th, guess what? Where we are right now. Has the market done that? Is the market on its way up? Did it go up during this period of time? You'll have to check and see. So let's look at the average profit. In fact, let's do this. Let's go to the one that's coming up. The next one, let's sort this by entry date. Like so. Just bear with me, folks. Okay, so let's go forward. So the next trade coming up is September the 16th, and it's a short position. Right over here, you can see it. Right. So let's look at the history. It's been right 78% of the time. And let's go to the history like so. And you notice this goes back 28 years. Let's look at the performance of this short position, September 16th through September 25th. Hold on a moment, please. Let's look at the performance. And I want you to think. There is one thing that I especially like about this trade. I want you to look at it very closely and think. Don't think too much. This trade lost money last year. That is beautiful. Why? Because it has never lost money 2 years in a row. So therefore, this is definitely on my list of trades to take. And remember, this is a short position. Let's look at it. Right over here. Short. July 6th, March, September 16th, September 25th. The stop, PO ratio, everything you need to know about this trade. Let's do one more, and then I'm going to run out of voice. We'll call it a day, but I just want to make sure that I can answer your questions. So let's go back here. Go back to the search and do one more thing. I want to show you a trade that happens at the end of the year. So let's leave the S&P the way it is. And let's go back to the months of the year and select the month of December right over here. November and December, because remember, November and December are the two strongest months of the year in terms of probability in S&P. Just bear with me. So let's see what we've got with these statistics right over here. Ah, there it is. 89% of the time. Close of trading, November 2nd. The close of trading, November 6th. That is a short-term trade, no doubt about it. In March, S&P, long. Let's look at the history. Like so. So this is an amazing research tool, which I never trade without this. And guess what? I can always do my trades in advance by checking a month ahead of time. Check it out. What's going on? It's working better. In fact, last year was its best winning year ever. So, let me see if I can remember how to open the chat and take your questions. Just one moment, please. Unless David or Anna want to relay the questions to me while I'm groping around looking for them.
All right. Yeah. Does anyone have any questions for Jake? Um, Barb is wondering if you take a look at day from a, I think that's the symbol DAY, weekly and daily.
Let me see what I've got.
And then someone requested gold, just gold after that.
As long as we're in futures, let's go back to the gold and check the gold out.
And then silver too after that.
Okay, let's do that. So let's go return to search. Like so. And let's go to gold. In fact, let's do gold and silver together. So we're going to select. I assume they want to see the month of August. So let's do August. And let's do this right over here. I'm going to find gold and silver. This is actually very easy to use. Here's gold. Let's go to silver. Just hang in there, folks. So here we go, gold and silver for the months of August. And we're going to use these criteria. 75% win, 5% risk. Search. Nothing there. Why would that be? It means either we're not risking enough. So let's do this. Let's go back here and put a 10% risk on here, which I would never use. Stop that big, but just in case. So let's look at it. 10% risk and do the search again. Nothing. That's good information to have. So when is the best time? Let's do this. Let's go to the rest of the year. Let's do August, September, October, November. I happen to know that September is usually the best month for gold and silver. So let's find out. So just hang in there for a moment. I'm going to get this one clicked out of December. Just bear with me, folks. December. Come on, computer. Okay, let's take a look. Here we go. All right. So let's do it in chronological order so you see what's coming up first. Entry date, December the 5th through December the 25th. 75% wins in gold. And here's the history. Right over here. We're looking at 49 years of history. That's almost a century. Who's going to give you that except for me? Here's a performance right over here. And guess what? It lost money last year. That makes me especially happy because they rarely will lose 2 years. And let's see if there's a silver trade. Let's go back and search. There's a silver trade coming up as well. Let me find it for you. Here's the silver in chronological order. December the 15th through December the 27th. A very short-term trade with 75% win. Let's look at the history. And there's one thing I don't like about this history. I can tell you that right away, but we'll look at it. Here we go. This one right over here. And 52 years of history. Here we go. I'll tell you what I don't like about this trade. I don't like the equity curve. It's too variable. It's too erratic. So there are other reasons to buy silver. There may be better times of the year, but this will not be one of them. So I hope you've enjoyed my little demonstration today. I hope you appreciate the fact that there are patterns in the markets. We have to take advantage of those patterns. But if you don't know the numbers, if you don't know exactly when to get in, exactly when to get out, you will be among those people who lose money. Sorry to say. If you wanted more information from me, drop me a line. Rules-based trader, RULESBASED, TRADER and see what 52 years of trading can be doing for you if you follow my methodologies. Thank you, David. Thank you, Anchor, for inviting me. I appreciate it. Sorry about the lack of voice.
All right. No, yeah. Thank you. Thank you, Jake.
Appreciate it.
Thank you for being here and sharing your knowledge with everyone.
You're welcome. It's been my pleasure.